What if I told you that even if the stock market crashes next year, you could still retire early? Not delay retirement, not lose everything, but retire sooner because of it. That might sound impossible, but it's not. Today, I'm going to show you exactly how normal working people, teachers, nurses, engineers, builders can build financial freedom even when markets fall. Because the truth is, the people who get rich during crashes aren't the ones who panic. They're the ones who keep going. Stick with me till the end because I'll share the one thing that has turned things around for me since 2019, allowing me to build over 500k in assets. Section 1, understanding stock market crashes. If the market dropped 40% tomorrow, would you panic? Or would you quietly smile and keep buying? That one question separates people who stay stuck, working until 67 or even 70 from people who walk away 10 or maybe 15 years earlier. Let's be honest, crashes always sound terrifying, especially when the news won't chirp about them. But here's what they don't tell you. Crashes are normal. They happen every few years and they're as much of a part of the financial cycle as the seasons are a part of nature. In fact, there's been a market crash or correction roughly every 4 to 5 years for the past century. 2008 financial crisis, markets dropped 50%. In 2020, the markets fell down 35% in 1 month. The dot-com crash in 2000, Black Monday in 1987, etc., etc. Each time the headline said, "This is the end," and each time the market recovered, grew stronger, and made new all-time highs. If you're a nurse on a night shift or a builder working in freezing conditions, you don't need to worry about every crash. You just need to understand how to behave during one, because markets recover, but your reaction determines whether your wealth does. Here's a little example of why investing is so important. If you'd have invested £200 a month since the 2008 crash, through Brexit, a pandemic, high inflation, you would now have over 106,000 and you didn't need to check the news once. That's what long-term investing does. Section 2, why timing the market doesn't work. Here's the biggest trap that keeps most professionals poor. Trying to time the market. It's not timing the market, it's time in the market. Most people wait for the perfect time to invest, but there's no perfect time. When the market's up, they feel they've missed it. They've missed the boat. When it's down, they're scared to buy, so they do nothing. But the people who just quietly invest every single month, the boring investors like me, end up building real wealth, and the data proves it. Missing just the 10 best days in the market over a 20-year period can halve your returns. Half. So if you skip investing because you're waiting for a dip, you're often missing the biggest growth moment without even realising it. It's like trying to wait for a green light that never comes. You stay stuck in the same lane forever. And here's the thing, you don't need to predict anything. You just need to participate consistently. Your pension and ISA are your automatic vehicles. Set them up, let them drive, and stop trying to steer every turn. In my 24 years as an investor, I've seen too many people with too many regrets. So if you don't want to be like the vast majority who don't plan for the future, hit subscribe so we can build wealth together. Section 3, what to do during a market crash. So, what should you actually do when the next crash happens? Step 1, do nothing. Seriously, don't sell, don't panic, don't switch funds. Because remember, every crash is a sale. When your investments drop, it's like your favourite shop putting everything 40% off. You don't stop buying, you stock up. When markets fall, the shares you're buying through your pension or ISA are suddenly cheaper. That means every pound you invest buys more units. And those units grow massively when prices recover. That's how crashes build wealth, not destroy it. The problem is, most people panic sell at the bottom, then buy back at the top when they feel safe again. That single mistake, buying high and selling low, can cost you hundreds of thousands over the years, over your lifetime. So when a crash happens, don't see it as a disaster, see it as your secret weapon, your early retirement accelerant. Every crash in history is turned into a buying opportunity, but only for the people who stayed calm. Which side will you be on when it actually happens next? Pause the video and get in the comments, because this is important, as your answer might have a huge effect on your future and your retirement age. Section 4, the simple system that always works. Here's the system that builds wealth on autopilot, even if you're time poor. 1. Set up automatic monthly investing. Use your workplace pension, stocks and shares ISA, or both. Choose a global index fund like the VANGUARD FTSE Global All Cap or MSCI World. These own thousands of companies across dozens of countries, so you're instantly diversified. Since 2019, I've invested in the VANGUARD Life Strategy 100 Fund for me and my daughters, mainly because it's low cost and globally diversified. 2. Invest a fixed amount every single month, whether it's 100, 200, 500, make it automatic. The key is consistency, not perfection. 3. Increase your contributions when you get a pay rise. You won't even notice the difference, but future you definitely will. 4. Ignore the news. The headlines exist to make you feel rubbish, not to make you wealthy. You're not trading stocks, you're buying your future freedom. This is how normal, everyday people like me, like you, across the UK quietly become financially independent without ever playing the market. They just keep investing automatically while they get on with life. The system does the heavy lifting for them. Before we carry on, let me give you a personal story of why investing and compound interest are so important. The magic of compound interest. I invested £500 a month into stocks and shares ISA at 18 for 6 months, but stopped and spent all of my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Let's say I was taught about things like inflation and compound interest at school. I know for a fact I would have invested from 18 to now. So that's a full 24 years. If I got average returns of 10%, that would mean I would be sat on £594,000. And looking at that huge amount, £450,000 is made up of interest earned. This is the power of consistent investing in index funds, the power of compound interest. Section 5, the mindset of the financially free. From my experience, no one gives a toss about mindset. Not my family, friends, and people I talk to on social media, but it's probably the most important thing for us investors. Like I said at the start, a change in mindset has allowed me to build over 500k in assets over the last 6 years. Here's the real secret no one talks about. Financial freedom isn't about knowledge, it's about psychology. You don't need to be the smartest investor in the room, you just need to be the calmest. The people who retire early aren't the ones with perfect timing. They're the ones who never quit. They never stopped. They understand one key thing. You can't control the market, but you can control your behavior, your emotions. When everyone else is panicking, you keep calm. When others sell, you keep buying. When others chase get-rich-quick schemes, you stay investing over time. And over the years, that calmness compounds. That's what turns an average salary into extraordinary results. Because wealth doesn't grow from complexity. It grows from consistency. Let me know how long you plan on investing for, so I know if you're serious about building wealth and potentially retiring early. Summary. Next time you hear about a massive market crash, take a breath, calm down, and try to remember you're not investing for next week, you're investing for your future. And if you follow this plan, the crash won't destroy your dream. It'll speed it up, because while everyone else is scared, you'll be calmly buying freedom, 1 month at a time. Now, most people will watch a video like this and ignore it, or not act on it. But if you've got to the end, you're not most people. But what if you want to invest long term, you like the sound of it, but you're not sure how to invest or what to invest into? Well, if you see below, I'll leave my latest playlist. It's like a free investing course that gives you all the info you need to invest in the stock market with confidence. And if you want one-to-one help and support, you can join my free investing community on School. The link again can be found below in the description.